whatever pair we are going to trade, we have to understand that the market conditions change during day, even intraday. But in general, what I'm trying to say is that behavior is cyclical, right? We have times of higher volatility. We are now approaching to summer, and we are heading to a quiet market with low volume and high strong market movements. So we have to respect those cycles, and we do have to understand the behavior of the market. So there are different opportunities market trade give us, and we can seize them all. The fact is that we choose the right tool for the right moment. Anyway, and as I always told you, keep in mind that it's not just the indicator, it's not just the tool, it's what we have studied about that indicator and that tool in the past, what is giving us the chance of success. The fact is that I always come to the same, I know, but I'm a firm believer in backtesting, right? If we know what happened in a pair with a certain time frame, in a certain pair with a certain indicator, the last 600 candles, we can make a good statistical base to forecast what could happen in the future. Nothing is 100% reliable. We know that. Nothing is 100% perfect. We also knew that. But as much more info we get from past, okay, much more chances of success we have in the future. It's really important to understand that when we have strong volumes like we are having this past 2 weeks, okay, maybe our daily strategies, or at least mine, okay, need at least they need a longer stop loss and a longer profit taking. That's the least they need to adjust to market conditions, okay? So if I have to make my stop losses wider, then I will have to reduce the number of lots I'm trading per trade. But I will also enlarge my take profit, okay, in this particular days, for example. Another alternative I do have is using alternative trading strategies, okay? These ones, I have studied them, I don't know, maybe 6-7 years ago when I just started, and I keep on bringing them back to my desk, okay, because they are useful, they are still reliable, and the percentage of accomplishment of good signal hardly change across the years, right? I keep on backtesting my old systems day after day after day. Anyway, keep in mind that indicators such as that, okay, indicators, they are not going to tell us anything. In fact, they tend to lag, and we know that technical indicators rather follow a trend and predict trend change or reversal, or be there to give us the exact top or the exact bottom of the movement, right? So, when we analyze market, okay, indicator is there after price action, and the idea is to try to forecast future price action. So, how do we use these indicators to do that? I will come with a couple of different strategies applied for different pairs. So we are going to review first this very short-term strategy. I like it most in pounds. Pound is more reliable, right? But that's just a personal question. But it's the most technical one. Always pound has been very good behaving technically, and that's why I will present this particular strategy with pound. It also works pretty fine, okay, with Australian dollar versus the euro, or Swiss franc against the euro. Not so good with euro, but it works. It depends on the market circumstances. And it's not working at all with Japanese profit. Okay, this is not a strategy you can apply for dollar yen or any other Japanese yen profit. As I always remind you, this is a UK MetaTrader. Okay, so my time frame is London time, right? So it could not work in the same in another kind of MetaTrader. So test that before applying anything we are going to discuss today. Anyway, this is a short-term trading strategy, okay, intraday one, that takes advantage of two market conditions. We have to check the maximums and minimums of last positions, right? In this case, sessions means hours. This without taking into account current one, right? I will mark it right now. Okay, if I discard that candle, okay, my high of the last 4 sessions, and we have a great trading war yesterday when we do this example, a great trading signal with highly profits. Okay, and don't expect it to happen today again, but I think so. Okay, I will count 1, 2, 3, 4 candles. This is the fourth, including current one. Okay, so I will set my stop and resistance levels, my trigger levels. Okay, in those maximums and minimums of the last session. If the pair during this candle manage to stay inside this one, okay, I will probably have to adjust them because this one will be closed then. Okay, so this one won't count anymore, and I will have to see if this one sets on the low or whatever. Probably not. I will have to adjust. Anyway, the idea is to make the buying trade, okay, once the pair breaks above the 43.60 in this particular case, or sell the pair under 43.05. We have one filter to this, and that's the moving average you are seeing right now in red in the middle. This moving average, as you can see, is a 10 periods one, simple, yes, but applied to typical price. It's not applied to open, it's not applied to close, it's just the typical price one. So that will be my filter, either to buy or to sell. If I'm going to buy, I will do it above this level. Okay, if the pair reach 43.61, I will be buying the pair. But how the moving average acts as a filter? Price should be, when it reaches 61, at least 8 pips away of this moving average. In this particular case, it will be 43 pips away there, quite a lot. So I do have a good trading buying signal in that particular case. On the contrary, if the price is about to break the low, right, around this 43.05 level, I will also check prices. In this particular case, it's just 10 pips away, but it's enough, okay, it's enough. It's 10 pips away of my breaking point, so I could sell every time or buy, okay, with the condition that the price should be at least 8 pips away of that moving average, right? It's quite easy to get into the market. Now, let's see how we set the stop and limit, okay? How do I set my stop loss in the short-term trading strategy, intraday one? Okay, the idea is to set your stop. I usually set 17 pips plus spread, okay? It will vary, but an average will be 20 pips. Right? If we have 3 pips spread in pounds, maybe around 20 pips of an entry point will be enough. Meaning, if I have a buying position, I will be buying around 43.61, 62, okay? Above this level, in fact, a bit more because of spread, right? This is the ask price, not bid one. But anyway, let's say we buy around 43.62. So my stop loss will probably be placed around 43.42. 20 pips away of that price. The same goes to the downside. My stop is an average of 20 pips. How do I take profits? Okay. The fact is that when we have high volumes in the market, the breaks of this fast 4 hours candles high low would probably trigger an interesting continuation run, right? So I will recommend you, okay, if you are not following the trade, if you get into the market, right, and leave the trade there, put a 45, 15 pips, 50, pips, take profit. That's not much. But if you're watching the pair and following it, I would recommend you to move your stop loss at least to break even when you got 20 pips inside the pair. Really, it's hard to see it making pullbacks, but 20 pips of gains will probably came fast, right? If the break takes place, and we could move our stop to break even then, and keep on following the movements and keep moving stuff. I do believe that it's better to make a few profit but make none or even lose. So it's a good strategy. We can move our